Hey guys, just wanted to talk about a question that came in from one of the YouTube watchers. One of you guys basically reached out to me, which I think is awesome, and asked me to do a video on basically equity growth. So growing an account um, with a smaller account. So basically, obviously, not a lot of people have a lot of money, so they want to trade a bigger account and the psychology behind doing it. And I think it's a step-by-step process. If you can't build the good habits with a small account, then you won't be able to do it with a large account. And I think this is where I think it's extremely important. So the capital amount is completely irrelevant. It's absolutely irrelevant. And you have to understand that from the ground up. Okay. What's more important is how you do it. Now let's look at this on a month or even, yeah, let's look at it in a month period, right? Look at somebody here who's a new trader, doesn't have a lot of emotional awareness, takes a lot of trade, doesn't kind of has a plan, doesn't know how to follow it too well, does whatever they want, impulsive, emotions sometimes get the better of them. They make a lot of silly mistakes. They're still not fully self-aware, but they're kind of getting into it. This is probably something a lot of you guys who are newer to trading can familiarize with, right? Equity curve, you go up, then you come back down, and then you're in drawdown, then you kind of make your way to the break-even dance for a bit, and then you break above and you think, okay, it's happening, and then you kind of just self-sabotage and you drop off and lose your account, right? If you're that number one person, you need to realize that you're just at the beginning of your journey. You will eventually become this person with a lot of lessons. But look at the difference between trader number two, right? Trader number two takes a couple break evens, does take a small 1% loss. Over here, you can see bad risk management, sometimes 2%, 2%, 1%, 2%. Even over here, took a massive 6%. That person had bad risk management. Look at this one. Good, break even, break even. It's following a strategic plan, knows what they want to do. They're a little bit not fully self-aware of their emotions, but they're kind of there, but they know how to follow their trading plan. They've tested it, they've done the homework, they know what works, they know how to read their charts, their technicals are good. They're just not at the best emotionally. And what that can lead to is it can lead you to missing a lot of trades, not being very self-aware about what's actually happening in the market, and could lead to more break evens. And I'm telling you this from experience because it's happened, right? And it will happen to most people who don't acknowledge these things. So you can't jump these steps. Usually a lot of us start like this, a lot of us, and then we start gradually getting into this break even sort of person, and then we eventually come into the green, which I'll talk about after. So we can see break even, break even, break even, a small 1% loss, only in a 1% drawdown. Then we push up aggressively, make a 3%, 4% win, then we take two break evens, make another 3% win, then we lose 2%, and then we come back up, and then we're overall ending the month on, let's say, 10%, meaning that you can scale on your account. That's the sort of person you want. And if you look at it compared to this, let's say this person took about 20, 25 trades over the course of the month. This one over here, let's say, took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades, right? Almost half, yet they made more than 3 times the amount of profit, and that person lost their account. This one actually grew, and now they're getting scaled up. And let's say any amount, it doesn't matter, even if they had £100 and they were practicing and learning on a real account, but on $100, they formed good habits and they can replicate that on a funding account. Doesn't matter what assessment they go for, they can go for 100K, they can go for 25K. Yes, okay, there will be a small monetary factor to it, being like, okay, well, you know, greed, ego, but this is something else you're going to have to face further down the line. So those are the psychological factors that most people are not fully self-aware of, and which cause them to actually self-sabotage because they're not fully aware of it. If we go back to trader number one for a second, and we just have a little look at what happened towards the end. So we can see over here that the person was up on their account, but then all of a sudden dropped, went to break even, got impatient, or something could have happened there emotionally outside of trading, and then they dropped off and lost their account, right? Over risked. Because some people, they're not comfortable with just, this mess, but you have to learn from everything that's happening here, right? How many trades are you taking? Are they all good trades? Are they all quality trades? Do they hold very good similarities? There's so many different factors that I would say that people are not so self-aware of. It does cause them to be very impatient and make a lot of bad decisions. So one major thing that I'll say to you is if you find yourself being this type of person, you need to take a step back and consider, how can I be better and how can I become a little bit more like this, right? But even better, let's talk about the green person, right? So this is the person who's basically at the top of their game. You know, they understand what they want, they understand how they're going to do it, and that they don't struggle on following their trading plan. Okay, they can basically follow it like the back of their hand. You ask them, what's in your trading plan? If you could draw it out on a piece of paper right now, could you do it? Yes, absolutely. Could you tell me exactly how to take those trades? Yes, I could. Does it mean they'll be able to take it? No, absolutely not. But they can tell you like the back of their hand. If you're watching this and you don't have a trading plan, that's the first thing you need to go off and consider. Formulating a plan for you to take action. The second one is actually go test that plan out and actually get very familiarized with it and make sure that you actually understand it like the back of your hand. And then lastly, once you've tested it and you've put the plan together, made it very simple, concise, and very easy to understand, then you can go and take it on capital of small account capital, 500, 1,000, whatever, and go practice it with proper risk management. And then you can basically see how you evolve. And then if you find yourself in either yellow or green, then at that stage and that stage only, that's when you want to consider yourself taking a funding assessment. If you still find yourself being in the red zone over here, then at this point here, this is when you want to be like, okay, I'm not going to touch a funding assessment until I can fix this. There's a lot of lessons for me to learn in here, and I need to go back and study myself more than ever now so that I can practice that. So, going back to the green person, this person understands their trading plan. They they're not the smartest person in the world, and you don't have to be, but they understand their trading plan well enough. They have the discipline to follow it. They're not impatient. If they go into 2-3% drawdown, they're not going to suddenly start self-sabotaging and opening up more risk. They understand that it's a game of probabilities. They understand that losses are a part of the game, and they take it like a man and they just move forward. They also understand that we do make mistakes. From time to time, we could make a mistake, which could be a minor setback, but once we make that, we learn from it and we move forward. Okay, there's many different factors that I could say, and there's a few people I can list out that are phenomenal to follow and get great advice from. But like I said, it's not just about um, you know just about your trading plan and following it. It's also about understanding everything around it, because data changes. You cannot really find two trades which are exactly the same. It's like looking for two fingerprints which are the same. There will be similarities, they'll look almost identical, but they won't be exactly the same. And don't look for perfection. If there's enough, there's enough. Take it and move on. Have criteria set in place for what you do if something else happens. So a plan B for your plan A, essentially, and the variations of it. So we can see that this person has moved up 3%, pushed down, lost two trades in a row, 2% down. Now they're drawing back. Then they win another trade, 2% up, let's say. Then they lose one, 2% up again. They lose one, 2% up, lose one, and it just goes on, right? And then all of a sudden they get a 3-loss losing streak, right? At this point here, a lot of people will probably be like, oh, okay, I might have been trading, let's say, 20K, or even if it was 100, and this was suddenly at $150, right? You're thinking to yourself, well, I made X amount, or not 150 because it's not realistic. But let's say you're on $500 and you made 150 here. Okay. Now, at that point there, you're probably thinking to yourself, like, wow, okay. And now you're down to like 125. Okay, big deal. You were able to do it systematically. Now we go back and look at trader A, B, and C's trades. Okay. Did this person journal all their trades? Probably not, because there's so many. Were they massive similarities in it? Probably not. Did this person, were they emotionally aware, self-aware, so many things? Absolutely not. Was this person, yeah, okay, they kind of had it, they were emotional, they did make a few mistakes, but they stuck to the plan, and we could see that throughout their trading plan, and there was growth. Did this person, yes, they followed everything. Were they very emotional way? Yes. Did they make mistakes? Yes. But did they fix it? Yes. Did they take losses? Absolutely. Every single one took a loss. There's no such thing as a trader who can just, no one moves like that. It's not possible, right? We have to make small adjustments over time. But the one thing you can notice as well is you will notice with some people's equity curves, they are like this, right? And that is a good equity curve because essentially they do take losses, but they take better wins. And the trades that they're eyeing up, okay, cool. Let's say this is over a course of a year. This person took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 trades. And let's say this person made something like 32% in a year. That's phenomenal. Now you take that over to 100K capital. That's $32,000 in a year. You take that over to a million. That's another, $320,000 in a year. So once again, the amount of capital is completely irrelevant. Don't worry about that. Build the skill with any amount of capital, live capital. Build that skill now, and then you can replicate that over and over again on any amount of capital. And eventually you'll take these steps and you'll gradually go from red, yellow to green. Okay. And eventually you'll notice these things. You'll start off doing a break even dance for a while, but it's when you fix these errors here, because if this person over here suddenly got more self aware and start taking less trades and then started, dabbling with some entries over here, what they might actually find is they might get some gradual growth, you know, but if they had proper risk management, if you slim this down and you looked at the risk management, they'll probably be at break even despite having this massive drop down. But what I'm really going with here is you can be a very successful trader. It's just don't worry about the capital you don't have. Worry about how you're going to grow the capital you have now, because when it comes to a point later on, right, when you need the capital, and let's say you're trading with $100 over a course of a year, right? You're going to build a skill where you're going to eventually go from red to yellow to green, right? Over a course of maybe 2 to 3 years, most probably, but you'll definitely be at yellow at some point. And when you're at that yellow stage, you can say, okay, well, I'm seeing growth on a month on month. I made 7% this month, 6% last month, 8%, so forth. Now you can go do a funding assessment. You can go do a funding assessment of 10K, cost you about $85. If you don't have $85, then go get a job, get $85 and then pay for it. It's not that difficult. Like some people assume that, you know, can't afford it. Well, you can afford to have internet, you can afford to have a phone, you can afford to go watch this video on YouTube. You know, there might be the rare 0.5% of people who are watching this video who are in the library right now trying to, get some information on how all of this works. But the truth behind it is, you know, you somehow were able to buy a phone, you were somehow able to have a laptop, you were somehow able to, have a TV, watch this stuff. You can afford the things you want, but you're not willing to do the things that it takes to get there. So if you're willing to, for example, go out, make some money, even if it means go wash some cars, whatever it means, go make some money, do what you have to do, and then you're no longer going to have the issue of not having the capital, right? But the good thing about it is you're going to have the skill. So even if you obtain that skill with something small like $100, you can then take that over and now you can go and trade a bigger account, right? You can go do a funding assessment. Still keep the day job, keep it on the side in case, something does go wrong, because you can't expect to be perfect first time round, but a lot of people, they get it very quickly. And then when you do get it, you move forward and then you grow with it. You go from one, and the next thing you know, you've gone from trading this 10K account to trading, let's say 60, and then you scale and then you go to 120. At that point where you're trading 120K, you're probably going to take one payout is paid pretty much your year salary. So, or not even your year salary, but a majority of your monthly or quarterly salary. So at that point there, then you have to ask yourself, do I need my day job anymore? No, absolutely not. I've now got the skill. I've sustainably grown. I am green, right? Or I did it yellow, but I'm now becoming green, because you learn through these break evens, right? If you just let them be a break even, there's no lesson in it. But if you do learn from it and you analyze it and you sit down and really think about, why did I take those break evens? Was it the best entry? Was it in the best place possible? This, right? Think of it that way. And then if you take those trades, which are the best trades possible, which fit you as a person, fits your personality, you're going to grow better. So just wanted to share that with you. And I think that hopefully covers it. Talking about prop firms now, and the new evolution of the industry now, there is a lot of prop firms out there. we're all very much aware of this, right? There's so many prop firms, and I'll be honest with you, a lot of them are garbage, absolute garbage. And I'll be honest with you, you just don't want to waste your time with a lot of these crappy prop firms, because what's going to happen is you're just going to get lost in taking challenge after challenge after challenge. Just consider it like this, right? Right now, you live in an age where if you need to get capital, you can get it. But a lot of people who don't have a skill are trying to get the capital, right? Look at it this way, right? Everybody, the highest paid salary, let's say right now, is builders. Anyone who can do electrical work. Okay, cool. So in order for you to be an electrician, you could either go to the shop and buy, um, you could either go to the shop and buy all the electrical tools and then put out a application and then basically say, I'm an electrician, and if you need work, then you'll do the work, right? And then you'll make some money, right? If that's how you think it's going to work. But obviously, we know that obviously electrical work is quite dangerous, and I don't really advise that, right? So the idea is obviously, yeah, go to the shop, buy the tools, put a resume out, and go get a job, and then you make some money. Okay, that's number one. But the thing is, between here and making the money, this person doesn't really know how to do electrical work, and they haven't really studied it. They don't really know much. So the odds are they're probably going to make no money, and they're going to make a loss on the investment there. So overall, this was garbage. So did that work? No, right? Now let's look at trading. You have the trader, you have the funding assessment, and then you have the outcome. Look at it the exact same way. You have no knowledge. The funding company is giving you a demo account for you to demonstrate your ability, which you cannot do, which is now resulting in no money. So overall, that failed as well, right? What you actually want to do is you want to go to the broker, right? Which is basically a corporation which is regulated, FXCM, OANDA, so forth. There's loads. You can see them on TradingView. All the brokers associated with TradingView are regulated as well, so you can trust them. Then, obviously, this is you. I'll just add a skirt because there could be girls watching. So essentially, you have the corporation, which is the broker. Then you have yourself, and then you have the capital you invest. Okay, this is your money now. This isn't the outcome. The outcome is basically your trading journal. Okay, that's the result you want. Okay, you don't want money, you want a result. Okay, so you go to the corporation, you get an account, you invest your money, right, which is basically yours. So this is tied in together. You invest your money here, and then as a result, you get a sort of resume, right? So what you've done is you've taken your capital, you've put it into this broker, and then you've invested your money to get a resume off a trading journal of all your trades and so forth. Once you've done that, you're then going to have to move on to the next stage, which is essentially look for funding. Okay. So then you get your funding. Okay. Once you get the funding, so you've done all of this before you've come here, right? But you've built this, which is the most important part, okay? Because you've built all of this, you've got your demonstration, right? You did that on small capital, which, like I said, could be $100 or $1,000, right? Could be any amount. It doesn't matter as long as you can demonstrate your ability to the broker. So you're using their platform to demonstrate it, and then over here you have that, and then you take this, your trading journal, which has all the similarities, all your skills, your ability weighed up, and let's say over the course of, let's say, 24 months, okay, 24 months you're with this broker, okay, 24 months you're with this broker, and you built this resume with them. So there was a lot of losses, but then eventually you came up and you built a skill and you're consistent. Okay, great. It could take longer, could take less time. Then you take it to the broker. This goes over to here. So then you now take the capital that you made. So this resume also led to you having some more capital because you would have made money at this point. So then we have this. So you take this and then you invest this into here. All right. So once you've invested the capital in there, Then you have the funding assessment. The outcome of the funding assessment is basically more capital. Okay. You basically are investing in yourself, right, to make more capital, right? So the outcome of this is you will have more money, right? So when you are investing your skill, your resume is your skill, right, into the funding assessment, then the outcome is you as the asset, because you are the one who's now demonstrated your skill and ability to the funding assessment corporation. And then from that, you then go back, and what happens is the funding assessment company who's giving you capital is giving you more capital. But then at the same time, as a side effect, the more capital is now making you richer. Okay. But this all started because you invested a small amount of money, practiced your skill, built a portfolio. That portfolio then represented some growth, and you used some of that money from your growth or from a job or whatever. You put that then aside, you put that into your funding assessment. You still have this account if you want to use it. You put that into your funding assessment. You then demonstrated your ability, so you become an asset to the funding assessment corporation. And then what happened is, as you showed them how good you were, they then, as a side effect, gave you more money, and they kept giving you more money because you were good at it. So this could have never happened if you never did this. So going back to the original question, where it was, um, what was the original question again? Let me just double check that. Yeah. So if you don't have a bigger account, psychological way of growing it, and then prop firms and the new evolution of the industry. So this is basically the bit covering about the psychological side of the prop firms and how to approach the prop firm. And I think if you don't approach it in this way, you could struggle massively. Some of you may have been doing this, but if your resume, your portfolio isn't consistent and you're not at that consistent level, then just leave it. Don't waste your time, because there's no point doing this, because then what will happen is you'll go through a back and forth, as I showed you a minute ago, where you'll just do funding assessment, and then all the money and your experience is being put into this company and not into yourself, right? So then what's happening is you are investing all of your money, right? This is your money. All of your money is being invested into here. You're investing your time into your money, and then what's happening? It's going in here, but it's not going anywhere. It's just staying here. This is where all your money is going. So basically, you're just giving your money to this company just to do their demo assessment. So if you want to be good, think about that. Now, the second thing I would really say, and I would really, really suggest to you, is that get education. And I say that with everything in me, honestly. Go get proper education. If you don't have money, you don't have time, then find time, find money, because that's what's going to make you a good trader. That's what's going to build your capital. That's what's going to make you basically successful in the long run. So if you don't go off and invest in yourself now, then you won't see a result later. Okay. Um, so that's the one thing I just really want to say to yourself is, if you don't invest in yourself, and I would say that whole stage I showed you just now, where you have the broker, and then you have yourself, and then you have the capital, right? If you don't invest in yourself, then, and I think that's the main part of this, and that's up here. Okay. And I'm going to just try and draw a book, but you're not going to really get it from a book. You're going to get it from a mentor. So I'll just put another person over here, somebody with the skills, the ability, and so forth, right? You want to invest a majority of your money not into any funding assessments. You want to invest your money into, yes, your broker, but that's a one-off investment of, let's say, 100, 200, $300, whatever. And then you want to invest the majority of your money into here. Okay. So you'll do whatever you have to do to make some money. Okay. Then you're going to put your money into two things. You're going to put it into a broker, but you're not really going to touch it that much. You're going to invest most of your time and energy into an asset, which is your mentor. That mentor is then going to give you the skills, the abilities, and the understanding of how he or she makes money, right? Because this person has a lot of money compared to you. And if they don't, then they're not really the sort of person you want to surround yourself with, okay? They have money. So you want to understand how and what they're doing to make all of this money. And then you want to understand that. And then you want to take that knowledge. And then what's going to happen as a side effect is everything this person is teaching you is coming straight back to you, okay? And then as a side effect, you're going to make even more money, right? Because that knowledge is then going to go in here and then it's going to come back and it's going to go over there, right? And then it's going to be one massive circle. So it works like this. You invest your time to make your money. You put your money aside, you put some into your platform, and then you put some into your mentor. Your mentor then, as an investment of you putting your money into him, he supplements it with time, gives you his time to teach you about the skill you want, in i.e. trading. And then as a side effect, your time, which is going into your mentor and also into making your money, goes into investing in your broker. So you can put some money into your account for you to then invest that into your skill. And then as a side effect of your money going into here, you make the money that goes into here, you make more money. And then with that, you get a portfolio, right? And then as we go into a loophole again, you take that portfolio and you put that into a funding assessment, right? And then as an outcome, that funding assessment then gives you more capital. Okay. And then you become more rich. And then essentially that's the growth cycle. So consider that. But in order for you to get to this point, and if you don't have that, then you need to get that. So I should have covered that the first time, but I didn't. But like I said, a lot of people have already got education, they know what they're doing, and they don't need it. But for those people who don't know what they're doing and they're trying to learn about trading, don't waste your time going to read about loads of nonsense online. It's good to get a basic understanding, but most of all, go get a mentor. The mentor will teach you everything you need to know. And then from there, you can start moving forward. So hopefully that was very useful and you took a lot of value from that. I did take two trades actually. So I took one trade over here, which was roughly around about 14. And I should be running around about 2.5 there. And then I took another trade over here, which I was a little bit nervous about actually. So it's roughly around about there with about 10 pips, 11-ish. And then, yeah, that's running around about 2. So I'm running about total 4% there on my account. Well, actually, it says 3.2. So perhaps maybe this one was a little bit larger. But yeah, even so, overall, trade is pretty good. And if you look at it in the larger time frame picture, which I'll just zoom up quickly on the 4, you can see the positioning is very, very well. So we had a liquidity area there, we pushed into it. We then correctively squeezed into it. Then we M-starred with a corrective price action, tapped into the liquidity, and now we're selling off. So if this doesn't commit, and usually it most probably will, if this doesn't commit, then we know that this is not really the structure we want to be entertaining. But I think more than likely, this is the area I really want to be looking to get involved in, because liquidity area over here, we had a correction into another correction, which happened to be an ascending channel into the correction. Then we tapped into it over here. We came up with a 1, 2, 3 into it over here. And then we pushed out, we correctively came out. So if we look at it in this way, it then became that sort of feeling this could be a running channel, what's going on here. And then as we didn't progress off impulsively, we came off correctively. I then noticed that this could be an M star. So then I was more interested into this area here of liquidity. And then as we kind of pin barred on it, I was like, okay, that's interesting. I want to see a 1 hour flag. Went to the 1 hour, and then I was evaluating this previously last month. I missed 2 trades because I was looking for the third touch and I wasn't happy to set the reduced risk entry. So I said to myself this month, if I do get more than enough, 2 tops, 2 bottoms, I'll set the reduced risk entry and take it, especially if it's a first or second flag. I was more than happy with it, so I took it. So I took that position, and then over here we had the corrective squeeze, which I really liked. So we came in like this, And then as we tapped into here, I understood that this could be an expanding, but then at the same time, because of how up we are in structure, this could just become a two touch. So then when I saw that come in over here, I saw that as a retrace, as a 1 hour retrace. And then I knew that there was news coming out slightly after. So I did, sorry about that, the video cut off for a second. And then, yeah, so as I knew there was news coming out, regardless, made sure that I mitigated against any wicking as well, and then was able to take that entry and get involved. So yeah, essentially still in the trade now. Understand the bigger picture, which is the most important thing, is where we are in structure, and there's no need to unnecessarily close this trade off early, because realistically, we've got our first sort of area here, which is our first target, and then inflection area there, and then the 90% rule off, basically trading this massive pattern. So there's a lot of room here for this trade and a lot of scaling opportunities that will form. So we have to understand that this isn't just going to drop off in one big 2, 3, 4 candles. This could take a sequence of days, weeks, and then understanding, you're in this trade for a longer period of time, but also understanding the possible that, something can happen along the way and we can come back up. So, management still needs to be on point, but that's that. So yeah, wanted to just share that with you guys. I hope you found a lot of value in this video, and I'll catch you guys in the next one.